So here we are outside Run and Ride in Milford in Staffordshire, and we've just got hold of a Kryptonite gold standard lock at £120. So this is what most, if not all, insurance companies require you to own, carry with you and secure your bike to something solid before you're insured if it's stolen when it's outside of your house. The thing weighs a ton. Hi and welcome to another Titanium Geek video. I'm Dave. All the normal stuff, we're trying to get to 1,000, we're almost there as far as subscribers go. If you could click on subscribe, like and all that sort of stuff, we really appreciate it. This week what we're going to cover is something completely different. We spend a lot of money on tech, as in bikes and all the associated tech and accessories that go with them. The thing is, do we insure them? First question to consider is, why take out cycle and accessory insurance anyway? Well, the key thing to think about is loss aversion. Now in life we can either eliminate risks by trying to secure our lives as much as possible, we can reduce risk, or we can accept the risk. So for example, let's say we buy an expensive bike and we put power meters on expensive wheels and we race and we go abroad on training camps, and maybe we even commute and live in a high crime area. What that means is we're taking on a lot of risk, not only to the bike but also to ourselves. There is some third party risk. What insurance does is to protect you against anything occurring that may cause you to make a financial loss. Cycle insurance covers three broad areas. It covers you for theft of your bike and insured accessories. It covers you for personal liability, and it also accidental damage. First of all, things to think about yourself, about the risk that you accumulate. What an insurance underwriter does is looks at the risk that they're taking on, because what they need to do is to make sure that you pay a premium that compensates them for the risk, and obviously for profit and all that sort of stuff on top. But key thing is, they don't want to insure a lot of cyclists that then claim and that then make a loss. So they need to look at your personal risk. So if you turn that around and you think about underwriting yourself, think about what type of riding do you do? How often do you do that riding? Where do you do it? For example, do you mountain bike? Do you commute? Do you race? Do you just poodle about at the weekend? All that has an impact. You might just nip to the shops. That will have an impact on the risk that you take on and the likelihood of the three different things we talked about happening. Also, where do you store your bike? Do you store your bike at home? Do you store it in a shed? Is it locked up to something? And during the day, do you commute and lock it to railings, for example, London commuters? What personal risk are you willing to take? For example, the more you do something, more likely it is that something's going to happen. Just simple maths. Also, think about your budget. If you're going to insure a risk, what can you afford to do within your normal monthly expenditure? And also, are you already insured? Is this risk already being taken on board? Does your home insurance already cover you? So it's really worthwhile, before you step into something, you really think about it. The Latin phrase used in insurance is ubere me fidei, if I remember correctly, which is buyer beware. So really be careful about what you take, because you don't want to double insure. Similarly, if you do think it's important to insure, you insure the full amount. Remember, in general insurance, which cycle insurance is, you're only covered if you fully insure something. If you what's called proportionately insure, for example, you've got a £10,000 bike, let's be ridiculous, got a £10,000 bike and you insure it for 5, if you were to have it stolen, you'd be covered for 50% of what you've insured yourself for. So the likelihood is you would only get £2,500, not the 5, not the 10. Also, if you've taken out home contents insurance, what is the maximum they'll cover a cycle for? Have you previously increased that and had those cycles and accessories covered under specific items? And if they have, do they cover you when you're outside the house? So think about that one. Also, just a separate thing, for those of us that train indoors a lot, you might have other accessories on your house contents insurance, for example, turbo trainer, or 2 or 3, big screen, gaming computer and all that sort of stuff. Those are probably special items that aren't covered automatically under house contents insurance. So just a separate aside to cycle insurance, always when you renew your house contents insurance, do take a deeper dive and look at specifically what is and isn't included and what in addition you can add to that policy. I'm going to draw you a little graph now that explains what I mean by accepting risk. Remember we said about eliminate risk, reduce risk, and then just accept the risk yourself. With any type of insurance, think about on these axes, what you've got is you've got likelihood and impact. So for example, if we go to the extreme here, we talk about assurance, something that's definitely going to happen. For example, you're dying. The likelihood of you dying is absolute, but the likelihood of you dying, let's say before retirement, might be, depending on your situation, might be quite low. Whereas what would the impact be? Well, the impact would be very high. If we go on the other thing about a bike insurance, what's the likelihood of you having your bike stolen? Well, it depends on your situation, quite difficult, but if we look at the stats, it's actually quite low. What would the impact be? Well, it depends on the cost and how easy it is to replace. So we don't really know. So you've got to look at that situation. So for example, you could say I want to totally eliminate the risk of me ever having a bike accident, ever hitting somebody on my bike, or ever having my bike stolen. Well, don't buy a bike. That's eliminated, so that's a bit ridiculous. On the other hand, if you accept the risk, for example, many of us cycle out to a cycle cafe at the weekend with proper bike against the wall, and we sit with the mates chatting away. A bike isn't secured. On the way, there might be an accident, we might fall off a bike and damage it, and when we're at the cafe, somebody might turn up and steal a bike. And that's why we accept the liability. Obviously, if the bike is stolen, we have an injury, etc., etc., we have to accept the financial burden of that. Okay, let's have a look at theft stats. If you look at this video here where I've recorded a web page, you'll see that the most risky place for theft is southwest London, and next after then is Cambridge. So you can imagine big bike commuter areas, there are lots of bike thefts. In other areas, more rural areas, where we live, in Derbyshire, you'll see the risk of having your bike stolen is quite low. You'll also see the most likely places, motorbikes in the background, not push bikes, another area of insurance if you can hit this over my mic. But where is your bike most likely to be stolen from? Probably most likely to be stolen from when it's left outside somewhere, or it's most likely to be stolen from your shed. So we'll show you these screenshots here, and you can gives you good data, and we'll try and put some links down below in the description so you can do some further research yourself. But you can see there is a likelihood, obviously, that you're going to get them stolen or damaged. What is interesting about bike insurance is normally when you insure anything, for example your car, the insurer wants to know your postcode, they want to know if you can use it for social, domestic or pleasure or business, and they also want to know how many miles a year you do. Now with bike insurance, and we'll use a well-known money supermarket link off here, and we'll do an insurance quote for a typically priced bike, let's say £2,500, according to bike shops. That's a sweet spot where people buy a really nice bike. So £2,500 bike, it asks us for our postcode. Now we'll do a quote, and what we'll do is we'll do a quote in Lichfield in Staffordshire, another affluent area, but it's got far higher bike crime, which is Euston in northwest London. So just two places I just happen to know postcodes for, so we'll just put those postcodes in and do quotes. You'll notice it makes none or very little difference to the price of the insurance. Which, when you think about it, that's ridiculous. Because if I was commuting in London every day and leaving a bike attached to railings, the chance of getting my bike stolen is probably relatively high. Whereas if I'm just riding around socially in Staffordshire, Derbyshire, anywhere rural in the UK, the likelihood of me, and when the bike's always going to be in my sight, the likelihood of having it stolen is low. Also, if I live in a low crime area, The likelihood of getting my bike stolen from my shed or my house or my garage is low compared to a high crime area. But it seems that the insurance is set up on a basis assuming we all live in the highest crime areas. If you look at the price of cycle insurance, it isn't on a par with car insurance, it's more expensive. I have joked, and it's actually true, if my most expensive bike, if I was to insure it through the leading insurers, it'd be about the same price each month as insuring a Ferrari. Just have a think about that. So what's the likelihood of me having an accident in a Ferrari compared to, or having it, in this context of talking about theft, having a Ferrari stolen in context of having a bike stolen? Interesting one. When we come down to damage and things like that, it gets even more complex. So that was theft. If we look at accidents now, this isn't just accidents as in personal injury, but it's accidents as in damage to your bike. In the days we all rode about in steel bikes, if you had an accident with a steel bike, the worst you got was a dent. Perhaps sometimes they broke, but the worst you got was a dent. You get back on your bike, it was fine again. You might have broken the derailleur or things like that, bent the bars, etc. There was some cost. But aluminium bikes, you had a break with an aluminium bike, got more worrying because, you know, sometimes there's a stretch fracture in an aluminium bike, if I can get the word out. And from experience, twice I've had aluminium seat post break, and once I ended up in hospital. But that's, you couldn't see the crack that was there. It was hidden away. With carbon fibre, it becomes even more complex. As you know, you can knock carbon fibre. You can't see the damage, but the damage could be lying in there. So if you have an accident with a carbon fibre bike, it becomes all the more important to have that bike be able to replace it financially. So what we've talked about so far is you're covering yourself for theft, accident, and personal liability. You could almost put personal liability and accident together, but those are the key areas: theft, damage to your bike and accessories, and also third-party liability. Some of the insurers do cover as well extra bits and bobs, for example, loss of limb and things like that, and they pay you out fixed amounts. But let's keep it nice and simple to those three areas. So we've looked at the video and we've looked at comparison cost. As I said before, when you're doing a comparison cost, nip into the policy documents and look at the policy documents before you apply and see exactly what you cover for and what the terms and conditions are. Now, there's a new entrance to the insurance market, and just like all these videos we do, we're not sponsored by anybody. This is, you know, unbiased. So I'm just mentioning Laka because Laka make a lot of noise on just about every cycling podcast I listen to. But also they've been very, very open, and we put out some stuff on Twitter asking people, or telling people we're going to be doing this video and associated articles, and we asked for feedback. The only people who came forward who said they got cycle insurance and they'd had good experience, bearing in mind this is like a survey of a few and this isn't, you know, metadata or whatever, were Laka members who were very enthusiastic. And I think there's a reason for this. One chap wrote back to us with a very long explanation and told us all about his claim. To be perfectly frank, I read it, I thought, oh man, you're a nightmare. As in, if I'd been in the claims team for Laka, you're thinking, God, this guy is unbelievable. But Laka bent over backwards and made this a very happy customer, and he wrote enthusiastically all about what Laka had done just to find him exact frame, exact headset and everything that had been damaged on a ride. And what's different about Laka? Now, an insurance company, you think about what you do is when the underwriter and their claims experience, etc., people called actuaries, brilliant mathematicians, work out a risk, they work out effectively a distribution curve, what's most likely to happen, and then the tail risks and everything in between. And what they try and do is eliminate those risks by setting a premium that controls who they take on by the expense, and if you're willing to pay the expense, then you more than compensate them for the risk. And also they put the terms and conditions together in such a way that eliminates the number of claims that they pay. So what Laka do, well, most insurance companies do, the traditional insurer, you apply just like we've shown you on screen, and let's say your premium is £35 a month. You will pay £35 a month fixed for a year, then you reapply, and that renewable contract, you'll get a new premium set then based on that company's claims experience for that type of policy in the previous 12 months going forward. So your next 12 months might cost less, might cost more. What Laka do, Laka set you an upper level, So they might say, for example, you're insured for, or your premium is £50 per month. That's what you pay us, £50 a month. But that is the maximum. And we'll show this on screen here. Lacus Insurance is slightly different to everybody else, but their bike insurance, and there's also another type of cover they do for recovering and going physio and coaching and all that sort of stuff. And the premium's there, and if you want to find out about that, go and look at Lacquer. But you see their Lacquer bike insurance, let's say for argument's sake, it's, what did I say, £35 a month is the maximum, but indicatively you're going to pay this much. So each month you might pay a slightly different amount because it's based on the claims. And what they do through the Lacquer Club and the social aspect of Lacquer is try and educate the people who are almost like members of this Lacquer Club to be more cautious, to look after the bikes and bits better, to expose themselves less for risk. Because if they operate as a community, everybody's premiums stay down. That's the way in which they do it. Because the old problem with general insurance is fraught with fraudulent claims. House insurance, travel insurance, car insurance, all sorts. Massive nightmare for an industry to stop fraudulent claims. Bike insurance is no different. You know, who's to say that somebody hasn't damaged the bike in one way when they claim it was another because the policy doesn't cover it? Lacquer are trying to educate their members so they keep the premiums down. But they've got that top level. They're underwritten by Zurich, which is a monster, massive international insurance company. So it's as if it's, you know, they're doing on this, you know, through a little bit of a club and everybody's saving a little savings account. It's properly underwritten by a big insurance company. The rest of them, similarly backed by big insurance companies, but they have these fixed premiums. Now, the key things to think about for theft with all the insurance companies is exactly how you're covered. So, for example, if you've got your bike stored in your house for Lacquer, for example, your house just has to be locked. For a lot of the other insurers, they also insist on a type of lock to a British standard. It's a good idea anyway. When you think your house contents insurance is probably insisting anyway separately for everything else that's in your house. You need those certain type of British standard locks, 5-lever, etc., etc. However, when you store your bike in a shed or a garage, well, a lot of insurers also insist that that bike stored in the garage or shed or other thing within the boundaries of your house has, if it's a lower cost bike, a secure silver standard lock, or for a more typically priced bike, a gold standard lock. Now, these aren't cheap and they're not light, but what they also want you to do is to use that lock to lock your bike to an immovable object. So you just have to use common sense over what an immovable object is, but it means your bike has to be locked. For example, it's in your garage and you've got it hanging up, it's got to be locked to an immovable object like a wall. So if you've got it on a bracket, the bracket's got to be firmly on, and you've got to have one of these gold standard locks on the frame. From an insurance point of view, what they've done there is they're saying not only has the premises got to be secured, but you've got to have your bike doubly secured, which means that they're eliminating the risk of your bike being stolen. So therefore they could argue they're trying to keep your premiums down, but also they're protecting themselves. Lacquer don't require that. They just require you to lock your garage and your bike can be hanging up. Some other insurance companies are like that. Once again, look at the policy details before you click. So, interesting one were Yellow Jersey, a well-known bike insurer, and Yellow Jersey cover everything from people like us through to the pro teams, and you know, the comprehensive cover in all different ways and different levels of cover based on what you want. But when it comes down to the fundamentals of theft, read the terms and conditions, what you get covered. If you store it in your hall in your house, for example, never get out of that way with that with my wife, and it wouldn't fit in anyway. If you store it in the hall of your house is one thing. If you store it in an outbuilding, which is more likely, or in your garage, then you're going to have to take those additional levels of security, and that's the same with pedal assure and all the rest. So say, look at those policy conditions. When you're out and about, the same thing. All insurers require you to secure your bike to an immovable object with one of these safe, secure, let's call it a gold standard lock. The one we looked at recently was £120, some cost less. Some insurers, Pedal Insure for example, supply you with a lock as part of taking out the insurance, which is pretty good. If you're travelling about, if you're a social cyclist and you've got a 7 kilo bike that's your bike of your dreams, your bike lock is going to weigh about a third of the weight of your bike, and you're expected to carry that around and lock your bike up to the movable object in the calf. Think about that one. If you're a commuter, you're probably carrying laptops and stuff like that about with you anyway, and a spare pair of shoes, and an extra 2 kilos in the bag. It's extra weight, but it's in your backpack, and then you lock it to something else. If you've got a folding bike like a Brompton or a Hummingbird or something like that, then you're just going to fold your bike up and take it in somewhere with you and leave it somewhere secure anyway. If you take your bike about by car, what the insurers insist is, clearly your car's locked and any security devices fitted to your car are activated. You know, most cars will lock them and they've got all sorts of monitors inside and alarms and all that sort of stuff, and that's it, you're fine. However, for you to be insured, there must be violent entry into your car to take the bike. Now that seems fine until you think about how nowadays how most cars are stolen. It's by using something like an iPad with a special app in it and some gadgetry that opens the car and even starts the car. So what's stopping somebody opening your car, taking your bike out? And when I say bike, some of the insurers, the traditional insurers, only cover one bike. You might have 3 bikes in the car, they will only cover one bike being stolen, reducing their risk again. So somebody could come along with one of these gadgets, open your car, take your bike out, shut your car again, could even lock it again, and go away with your bike. No violent entry, not insured. So be careful of that. If your bike's on bike racks, the insurers require you to use one of these gold standard locks to lock your bike to the frame of a securely fixed rack. Now, I saw an excellent video the other day where a guy's using these suction cups. We must test them ourselves on top of the car. Try locking your bike to those, but you probably wouldn't anyway. You'd probably put the suction cups in your car when you go away. But just think about this. Just think about the risk you're exposing yourself to and what you're being insured for. Key things to also think about is full disclosure with insurance. Insurers are there's the thing called void and voidable. For example, if you can apply for insurance and you can pay for it, and you can be paying monthly. But if that insurer believes that you've given false information, your policy was never ever enforced properly, or is voidable. In other words, they can just cancel the policy on you because you haven't kept with the terms and conditions. So for example, fully insure everything, as I've said before, and provide them with all the information. They may want to know if you race, because there might be, for example, if we use Yellow Jersey has their basic cover, and then they have cover for people who do sportifs, and they have cover for people who do full-on racing. And that's another thing to look out for. What you're covered for in these different policies. They all have different slight levels. Most cover you for charity events and sportifs, but they don't cover you for racing if you're getting paid. Some cover you for racing if you don't get paid, and some don't cover you for any events at all. So just be careful when you look at that. So what I would say to you is just provide all the information when you apply, and that means, for example, if you've recently bought a gold standard lock, he says Firkin in his pocket, you need the receipt. Make sure you've got the scrunched up receipt. You don't leave scrunched up in your pocket. You keep that somewhere safe, because that proves that you bought that lock. Because what will happen is your bike will get stolen. You might have a great lock on it. Somebody takes the lock off. It has been known. And you said, they've taken it and I had the lock. The insurer will say on claim, provide us with evidence that you bought and own that lock. Also the same with your bike. You need photographs of it with your bike, you need proof of purchase, you need the valuation. If you've got power meters on there and you've got all that sort of stuff, make sure you've got that covered. Another warning on power meters. Power meters cost a fortune. Read the terms and conditions. For example, you might have a power meter on your bike. Let's say a power meter costs you £400. Somebody comes along with an Allen key or whatever tools, takes off your power meter, leaves your bike behind and walks off. That might not be covered. Probably covered if the bike gets stolen, and you've covered the power meter in with the insurance. But if they take it off separately, same with other accessories, drop your wheels out and steal your wheels, then you've got zip 808s on and you've left your bike prop somewhere, then you wouldn't be covered. It's only if the bike's covered and you insure that full value. So be really careful when you apply. So key thing to do is, in summary, think about the risk that you want to reduce. What are you willing to pay each month? What's the likelihood you're going to claim? For example, if you go on a nice bike, it might not be theft is the thing for you. It might not be, you think your chance of theft is low. Theft from a garage, I'd say, anywhere is relatively high, or a shed. Probably need insuring about it. But if you fall off and crash with that bike and it's carbon, the chance is it's going to be a write-off. So can you afford to replace it from your own money? So have a think about that. You might be on a bike to work scheme, you might be fixed into some contract, you've still got an obligation to pay. So insuring it and protecting it that way. And when you look at the terms and conditions, really read those policy documents. So at the bottom of the websites normally, if they're not readily available, don't insure with the company. The policy document's in there, read through, does it cover you for your situation, and are you happy to sign up for those terms and conditions? In other words, if you were to make a claim, would you be able to claim? So thanks for watching, hopefully that was useful. Comments down below, and look forward to seeing you on the next video.